back with Digital Week Online. I think that last panel on central bank digital currencies was fascinating. I really enjoyed the presentations. Now we're going to move on to another subject that's near and dear to my heart, which is startup and venture investing 2021. Not 2020. We're already on 2021. You heard it here first. So let's dive in. We're going to circle through our panelists first in the order that they appear on my screen, so not by order, any other kind of preference. Each one of you, please give a very brief introduction of yourself. Say where in the world you are, though for Jenny, I may just say for everyone because I'm in shock. And say what you do, what you're working on, the short version, and then we'll sort of dive in. So Jenny is my hero. It's 2:30 in the morning in Singapore. Looking good, looking fresh. We'll start with you. Go ahead, Zheng.
Hello guys, my name is Jenny and I'm from Blockcast. Blockcast is a Singapore-based blockchain news channel. So if you're looking for to get your project to be known in Asian market, I'm the person you're looking for.
Very good. Next on my screen is Roy.
Okay.
Roy, you're looking rough.
Okay, go. Thanks. Yeah, I think that's a compliment. Okay.
Oh, because of your project. Yes, go ahead.
Okay. My name is Roy Lee, and I'm the founder of Ruff Chain. Ruff Chain is a public blockchain designed for Internet of Things. It's cheaper, it's faster, it's more compatible with different type of devices, edge nodes, gateways, protocols, whatever. With Ruff Chain, your D application will be able to access not only just the virtual assets but the real world objects as well. That's pretty much it for Ruff Chain.
Very good. Thank you for coming on. Well, actually, maybe you didn't say it. Are you in Canada? I wonder everyone's location.
Yeah, I'm in Canada. I'm not based in Canada, but I'm trapped in Canada now.
You're trapped in Canada. I'm trapped in studio. Yeah, I know. I'm trapped in Studio City, California. It sucks. David, my good friend.
Hey guys, David Johnston here in Austin, Texas. I often am in Zurich or Zug, Switzerland. I run Yeomans Capital, an investment firm focused entirely on blockchain and crypto. Most people know me as the dApps guy, coined the term back in 2013, and it's been a fun ride ever since.
Good. Fred, I'll even say the best for last. One of the best for last. Fred, go for it. And turn on your audio.
It'll help. Fred Krueger, I'm with Metal and the Proton blockchain, and I'm in Los Angeles, and we have kind of a complete all-in-one solution. So we are very much wallet people. We have two wallets. One's custodial, MetalPay, where you can buy 35 different cryptos, and you can send fiat currency to other people and soon Europe, and then Proton, which is a blockchain and non-custodial wallet that we're integrating it in. So we're everything. We're a wallet, we're blockchain, and our goal is really to make it really easy and to communicate with apps. Where I basically think that, and I'll say this later, but I basically think kind of the current version of blockchain just doesn't work. So it's a very interesting idea, but it doesn't really work for consumers. So that's my answer.
Doesn't work or doesn't work for consumers? I have to tease that out.
To me, that doesn't work. You know, if I can't give it to my wife or my 13-year-old kid and they're like not interested, let me go back up to Fortnite. It's not working. You know, I think we're living in this Instagram culture where everything absolutely works, right? Instagram absolutely works. Facebook absolutely.
Interesting and definitely here to stay. So that's what I'm watching right now and spending a lot of time in.
There's a lot to unpack there. The two things that caught my ear the most were slowing down and as I think you said, as opposed to raising capital. Right. Are they not raising capital, or are they just raising capital a different way? But just
if you're watching these projects, right, it's very different than 2017. People aren't necessarily doing token sales anymore. They're doing liquidity events, right? They're providing governance tokens to their existing community. So it isn't like I wrote a white paper, give me money. Instead, it's like, oh, here's an application. I release it to the community. Hundreds of millions of dollars are flowing through these lending protocols or liquidity mining protocols. And then it's like, oh, let's give the community ownership over this and decentralize it. You can see Uniswap, you can see YFI, the different projects that are taking this model. And effectively, they make the announcement, and okay, for the next 7 days, anybody that owns the token is going to get these governance rights, these governance tokens. And you see sort of a rush of hundreds of millions of dollars in case of Uniswap, billion dollars flowing into their liquidity mining. That's pretty incredible. And there's a lot of copycats that came out and sort of created a bunch of froth, but it seems like that froth is dying down, but the core, reliable, interesting projects are still growing at a great rate.
Got it. And then Jenny, I guess I'll pass it to you next. Can you give us the view from Asia? Yes, I know it's 2:30 in the morning, but in a dark out, but still the view. And are you like David? Are you, I'm gathering by the name of your company, are you solely involved in crypto and blockchain, or is it tech in general? What's your scope? So view from Asia, or any order you want, actually.
Okay, so I think during this COVID-19 pandemic, everything surely slows down. But for the startups, it's a good time because you don't need to rent an office, which is quite expensive, and you can hire people working from home. So they are also willing to take less salary. So I think it could be a good time for the startups, especially in blockchain, and we got more and more innovations we can see, especially the DeFi, which is like pretty heated up from this May. So I think it's pretty much a good time for blockchain startups.
You made a very interesting comment. Last night I was reading about different stages of raising capital, and I was reading in depth about seed round funding, and numerous articles reference the idea that cloud computing drove down the cost of doing a startup and kind of opened up the market for seed funding. You just added a new comment that I don't think I've heard anyone else make, which is maybe now the floor has even dropped further because of COVID, and with people working at home and you don't have to get that WeWork anymore, maybe now there's a pre-seed seed, or the capital structures or raises are going to change slightly because of the second order effect of COVID is that the price of doing a startup will be even less than it was before. That's an interesting comment. What do you, and from, just so I understand where you're coming from, your primary focus is blockchain and crypto, or is it, again, is it the wider tech?
Oh, like blockchain and crypto. We are a professional blockchain news channel.
Fantastic. Fred, you are in office, right?
Actually, yeah, I recently got an office in the middle of COVID. I was just,
how are you liking that?
I love it because, nobody's going to an office. I'm the contrarian. I figured that, I could probably get 3 times as much space for the same price, which I could, and sign a month-to-month lease. And okay. I still take meetings here in my office. Well, I have a great home setup too, but I actually like hanging out and meeting people. So
I think you're a serial entrepreneur. I've known you a few years now. You again and again and again started. Have you been raising
all over $10 million? Yeah.
Say that again. Just say that sentence again.
10 exits, $500 million total. All my exits are 8-figure deals for me.
And as each one of these or most of these ventures involved taking in external capital to fund your growth and get to the next stage?
I mean, all of them have taken various types of capital. So, the very first one I did was entirely self-funded. And then, I've taken venture capital from the likes of Index Ventures and Draper and, major players. I've also taken public company money. So I've, raised money in the UK through LSE listing and raised $50 million for a listed company there.
So you fantastic. So you have your feet on the ground from the investment seeking perspective, at the very least, multiple times. What are you seeing now towards the end of 2020? And what direction do you see sort of the investment capital market heading as we go into 2021?
Well, I think you have to look a little bit beyond DeFi, because I view DeFi as a very much a bubble that is in the process of deflating. And I think by 2021, we'll be fully deflated. So my view is take a look at the price.
I got to jump in. That's a bold statement. Is it pure wreckage?
Yeah,
or is there a nugget of value in there?
It will be totally destroyed by 2021. Okay, like it will be a bad word. It'll be like ICOs in 2017. That's my view on DeFi. Now, I have some very positive things to say about Uniswap and sort of the model of Uniswap, but I think that I have very bad things to say about all the sushi swaps and sashimi swaps and flamingos and everything else going around there. This is based on a false premise. And the false premise is that you can make that there is 20% excess return that is baked in that can be achieved by farming. It's not correct. There is not 20% excess return that can be based on farming. This 20% is a Ponzi scheme that is entirely based on getting there early, selling governance tokens, cashing them out early, etc.
Let me pause you. I hear you, but I want to drill in on the topic of the talk. So for startup and venture investing, you as startup, people situated like you, what's the environment like in terms of receiving capital? Where are you seeing the current state, and where are you seeing the trend?
Well, I'll tell you some of my friends. Okay, so for example, my friend Greg Osuri just raised through a different kind of vehicle, right? So he actually did an IEO for Akash Networks, right? So I don't think the IEO is done at all, right? I think a lot of people are finding ways around that, right? Mm-hmm. So I think token sales are okay. They're under a different moniker, if you will, right? Mm-hmm. So I definitely think token sales are going to be interesting, and fair launch is interesting, right? You don't pre-reserve a bunch of tokens, but you may get in there early and start mining your own tokens really fast, like Satoshi did, right? Right, like Satoshi did. So I think all these models are interesting and okay, and I think tokens are here to stay, right? And I think people are going to be using token sales. And look, Filecoin Filecoin is now at $1 billion market cap, right? So, like, if anybody said like this stuff's not out,
and by the way, Filecoin was launched with a SAT.
Sure, but the point is that here we have a very high profile token sale deal, which everybody thought was dead. It's now worth $1 billion.
Got it. Interesting, Roy.
So there were right people behind it, the right story. It looks interesting. Right. People have an appetite for tokens. So I think tokens are interesting. I would say to people, yes, tokens are great, but you have to have good models. And I'm not sure that the DeFi model is going to last more than another 3 months. But I do think that there's a lot of great new models in crypto. So I would say for 2021, tokens are alive and well. But you better have a pretty original business plan. It can't be just I'm going to copy Compound or Uniswap and add 3 little twists and 5 lines of code. That is just not going to work anymore. I don't think. Maybe
I missed that window also. So I missed my early retirement. Roy. Okay, I'm going to bring you into this conversation. I want to get your entrepreneurial perspective on startup and venture funding.
From my experience, this year the total investment is definitely increasing, just like what David said. But the way is more on growth stage, not the seed stage. It's like when you have an idea or whatever, and nobody's going to invest you. Not many people are going to invest you unless you can prove anything. People look at your products. People look at your codes. I see a lot of investors. They hire people like me to help audit their other people's code. To find out if this code is decent or whatever, and they look at the projects based on your whether if you're a copycat or whatever, like sushi swap or swap whatever. Sushi is another example, but if you are a roughly smaller copycat, whatever, you have no innovations, nothing new, whatever, and not many people are going to invest you. And the sustainability is one other factor. If you can prove that your project is going to be self-sustaining in the long run, and more people are going to invest you. So long words fraud is like more we get more money, and most money are gonna go to the fewer projects who can prove themselves. It's like when you have a rope, either you hand yourself or you prove yourself. Yeah, the barrier is getting higher, but I think it's good news because if we definitely want to see a few projects that can prove something. Like 3 years ago, people know nothing about chain links, where people treat chain links like just the other projects. A lot of people still don't understand what Chainlink does, but there are a few projects that prove themselves in these 3 years. These projects are different from the some trash projects in the shitcoins, whatever, 3 years ago, and then the market gave them a huge market cap as a return. So I think it's good for people who can focus on writing codes, optimize your contracts, and prove your business models. If you can do that, definitely it's a good time for you. Otherwise, it's not going to be. It's going to be that easy as using token sale as a crowdfunding tour or whatever.
Doesn't that create a? So let me make sure I'm hearing you correctly. Are you saying that pre-MVP, it's now very hard to get seed?
That's from what I saw. People don't believe those things. People, a lot of investors, they just pay extra cash for their technical background friends to audit your code, and they look at your products. They want to see, okay, if your business model works. Like we can see some of the products, they still raised a shitload of money, but it's based on they prove they have a working business model and they have a good contracts. Your MVP, you can convince your investors that your MVP is going to work in within a short time, like 3 months, 6 months, whatever.
Interesting, Dave. I think you've been in this world a bunch. Let me pose something to you. I can see an investor wanting to wait for an MVP, and I can see an investor having been burnt before, seeing the froth, being cautious. I don't necessarily think that's a bad thing if you just have 1 or 2 technical founders banging out an MVP and getting there quickly. I wonder though if there's some projects being left on the shelf where, for example, you need 10 engineers for 6 months to get MVP done, but once it was done, it would be good, but there's not enough cash to fill the gap to get those 10
I think that's why it's largely happening on Ethereum. If you have to have 10 or 20 engineers and a $10 million budget and you're building a layer 1, that's really tough at this point. But if you're spinning up a contract that is doing something novel and creating some real innovation, then that's something where the technical barrier is a lot lower, right? Mm-hmm. It's writing the contract and auditing the contract and deploying the contract instead of trying to do a much heavier lift of building a protocol, right? Protocols take years to design, architect, build, and deploy, right? But the reason things are moving so fast is because it's contracts on Ethereum largely that we're talking about. Chainlink is a series of contracts on Ethereum, same with YFI, same with Uniswap, right? And I agree with Fred's point, a lot of this fluff is going away, but I would push back and say there are fundamental innovations, whether it's the automated market making, whether it's lending and sort of streamlining all of that. I think if you look just at AUM, like how much ETH or stablecoin is in those contracts, that's going to continue to grow very quickly. But I agree that things are going to shake out and a lot of fluff's going to be gone. And you're going to have the top.
But I will say this: I'm going to push back on the entire Ethereum argument, right? Because I'm very vocal online as being a very Ethereum bear, and so far I've been pretty right. Okay, I've been bearish on Ethereum for a while, and I continue to be bearish on Ethereum. And I think Ethereum itself is kind of a Ponzi scheme, and it doesn't work. And so the reason I say that is
I got to jump in. Literal Ponzi scheme, because that can be taken as a sort of a defined
in a way, it's
or just kind of scammy.
Something that doesn't work. Okay, so Ethereum 2 might work. Ethereum 1 does not work. and it doesn't work for the average consumer. And the proof of that is you have really under 20,000 daily active users of all Ethereum products right now. And so that's it. That's your number. Okay, you can go to DappRate or you can question their analysis, but it's pretty decent numbers. Okay, it's pretty. They're looking at the actual contracts of all the things, including Uniswap and including all the dApps which failed miserably on Ethereum, right? And at this point, you have DeFi that's working sort of on Ethereum, right? It's working in terms of AUM. It's not working in terms of users using it, right? There's so few users, and it's the same whales that are just recycling funds between the hot new projects, right? That's what it is. And those funds are largely Ethereum, so it's really like it's worth a lot because it's worth a lot, right? So because Ethereum has a high market cap, there's a lot of Ethereum tokens. Therefore, those tokens can go into various, sushi swap overnight, and leave overnight, So
Fred, I got to jump in. The comment that it's worth a lot because it's worth a lot is sort of a negative way of saying it has the network effect.
no, it doesn't.
No?
It's
Okay, tell me.
So it's because Ethereum has a very high market cap that those whales can move their tokens. And, Ethereum, let's start with it. Ethereum has a high market cap. Why does it have a high market cap? Well, because it was very overhyped in 2016, 2017. It totally failed to deliver, and it got crushed, and now it's coming back a little bit because of DeFi, all right? Okay, so we know that. So it has a high market cap, right? But because it has a high market cap, there's a lot of tokens that can go into DeFi projects on Ethereum. But all said, there's still 20,000 people using Ethereum now on a daily basis. Now, let me contrast that with my friend Amy Wan. Do you know Amy, Gordon?
Of course. Yeah.
Okay, so Amy Wan's got this little app called Bitcoin Blast, okay? Now, Bitcoin Blast has, just to give you some stats on Bitcoin Blast, it's doing well over 100,000 daily active users, okay? Which is 5 times Ethereum. Okay, so Bitcoin Blast is 5 times Ethereum. They're playing a stupid game called Candy Crush, okay? And they're winning 10 cents after about, a week of play. That's order of, I'm not exaggerating, right? So this game is getting massive amount, this game, and just to give you an idea of how big this game is relative to the entire ecosystem, there's been a recent study out of England that says that there's about 35 million KYC users. 2 million of those came from Amy, okay? So, 6-7% of the entire KYC crypto user base is from Bitcoin Blast. So, and really it's not a crypto game at all. It's just a game that you can earn a little bit of crypto. But my point is that Ethereum really is not it is not at all a venture scale thing, in terms of consumer adoption. Now, I think Libra would have been absolutely a consumer scale thing, except, everybody's scared of Libra and they're just shutting it down left, right, and center. So I think that's an opportunity for all of us because I think that, we can build stuff that's going to be consumer. And I think the big story of 2021 is, taking the kind of traction you're seeing with Bitcoin Blast and moving it onto layer 1, okay? And into wallets and apps and things like that, So
let me just sort of get you short on time. So Roy and Jenny, usually I like to talk about the impact of COVID on the startup and venture scene in Asia beyond. I thought your point about working from home was very well taken. Is it affecting valuations at all? Is it affecting technical choices in terms of the products being developed as opposed to the way that the startups are operating?
I don't think there's any relation between the pandemic and the valuation or the investment activities. People more, I think investors they're more looking at whether they're looking at the long-term base. So if it takes time, it's fine. But if it's not going to work, then it's not about the pandemic or not. Back to the previous question. I'm pretty interested about what Fred just said. I think a lot of people, people from general public, they have difficulty accessing the Ethereum or any other on-chain products is because we still have some sort of a technical issue right now, but we're working on it. I see the smartest people in this world, they are working on it. So it's going to take some time. And considering like 20,000 active users, I don't think it's a big problem. Look at the Binance, look at the Huobi, look at the centralized exchange. They have millions of users, like 4 or 5 million users each. So we have enough crypto users. Definitely we have enough crypto users. It's just like people, only small portion of users can access the DeFi right now because of the Ethereum, the barrier of the Ethereum itself. I think this thing will change. It's not about people who don't believe in crypto. As long as we have it, I think the hardest part is to convince people, like convince my aunt, whatever, that crypto is not a Ponzi scam, whatever. That's the hardest part. If you can convince them that crypto is not an exotic scam or whatever, I think it's just a matter of time what kind of products we're gonna see. Like Libra, definitely it's going to be something good. But Libra, I'm not a big fan of Libra. I think there will be more products that if there will be one-step products that can lower barrier of the people from general public to be able to access the Ethereum or the other on-chain products, the decentralized applications. That would be great.
Roy, I'm so sorry. I got to stop you. We just ran out of time, and Juliet is typing me, and I'm getting all kind of moderation warnings. So I wish we had more time. I think I'm gonna have you guys on my show so we can go more in depth. But I just want to thank our panelists. Really appreciate it. David, thank you. Jenny, thank you. Roy, Fred, but really Jenny, 2:30 in the morning in Singapore, and you pulled it off, and you did great. So thank you. And thank you, Penny Lam, for introducing me to you too.
Thanks, guys.
To be continued.